Thank you very much. And, only NAREDCO can put in a very eclectic panel like this. All the stalwarts, even just one guy from, this panel, you can easily spend an hour discussing not only dissecting and bisecting the budget, but also, what's happening with the Indian real estate. So every time, thank you for putting together this, fantastic panel that you bring in. We have two other panelists. There's Niranjan bhai and Rajiv, who have come in here. We've got about 45-50 minutes, so I'm going to roll on very quickly. First, Srini, I'm going to come to you. I know we normally go to Niranjan bhai straight, and this time I said is that I must give him relief. Otherwise, he is the one who gets on the spot. Shri, two quick questions to you is that one is that how much would you rate the budget on 5, one being the least, both on the general and then on the real estate? That's one. And then do you think that it was a sort of a populist or a prudent budget?
I would rate it as 4 on 5. I think overall as a budget, it's been very well balanced. There's no doubt about it. Specifically for real estate, I would probably make it a 3 on 5.
3 on 5.
Yeah. The only reason I would give those two rankings is that we were expecting two things. We were expecting a more populist kind of budget because this is the last budget that this government will present. And we thought there will be a lot of freebies. And the way she was going, Saptarishi and ye bhi karenge, wo bhi karenge, infrastructure mein itna kar denge, हमने कहा तो लग गई बात. Tax तो आने वाला है, and government borrowing programs, if it had been expanded, it would have meant that all of us would have had to pay a higher cost of capital. But I think the art of the budget, the way they have done it is they did not, the government borrowing program is more or less what was there at the same level, which means that we will not be crowded out for availability of capital, which is a big positive for our industry here. I mean, luxury housing mein thoda hai. All of you will be busy between 20th March and 31st March, but that's okay.
And that's one point I do want to drive a little bit, Srini, is that this removal of Section 54F or putting in a cap of 10 crores as the maximum capital gains that you can take on board. Would it impact the luxury residential market? Because luxury residential market, other than really Bombay and a little bit of Gurgaon, there isn't.
Absolutely, it's essentially just Bombay. Really,
but will it impact the sales?
There will be some slowdown, or there will be bunching up of sales after 31st, up till 31st of March.
31st of March ke liye acha hai,
but beyond that, the prices at which people are selling in Mumbai, kya farak padta? 10 crore to it's hardly rounding off error. People will.
Why 3 out of 5 on real estate and why 4 on 5 on general?
I think 4 on 5 is more on account of balancing it. So giving a tax break on the one hand for both, let's say, the people with 7 lakhs of income and 15 lakhs of income, and reducing the 42% to 39%. But I've just got educated by in today's presentation that it is actually not. So, but I think those two are, from a position where we thought that taxes may actually go up, and the market was also expecting a capital gains tax to be tweaked, and that didn't happen, so that was good. To tax on the REITs that they have tweaked is a little bit of a dampener and a negative. One did not see that coming, and 54 is the other negative. Other than that, it's fine. I think the budget allocation on affordable housing is great. Which will overall for the market may not necessarily help Mumbai and Delhi, but overall in terms of home ownership, I think it's great. So housing finance industry will do.
I don't know whether the audience understands that there is a little bit of additional, not little bit, there is an additional tax on the REIT that is going to be given because the amortization of the capital that used to be given back to the unit holders, it was divided into 2 parts. One was dividend and one was amortization of capital. There was no tax on that. That is what Srini is saying, is that is now come under the tax purview. So it is a little bit of a negative on the REIT, and certainly putting a cap of 10 crores. My last question, Srini.
Just one more negative that is there is that there is a provision which affects cost of capital for real estate indirectly, which is they've removed what is called MLDs, market-linked debentures. Market-linked debentures were used by non-bank finance companies to borrow in the market, and they were an efficient source of borrowing for NBFCs. because essentially they were converting interest into capital gains, and there was a sharing between the investor and the borrower about the cost at which the NBFCs are raising money. So once you start taxing MLDs, the source of capital for NBFCs will become more costly.
Oh.
And that will get translated into capital cost for real estate.
Okay, I wasn't aware of that. And what is that differential that is going to come up?
So earlier it was a 10% tax because it was treated as capital. Suppose you borrowed, if an NBFC issued a debenture at, let's say, 100 rupee debenture and had an interest of, say, 12%, then that entire 12% was being taxed as capital gains, the way it was structured. In very simple terms, I'm explaining. But now it is going to be taxed as short-term income. So which means NBFC ka jo arbitrage tha wo nikal gaya. Otherwise, now the NBFC will now start borrowing at maybe 13%. But if they are going to borrow at 13%, they're going to pass it on to you as a customer.
Yeah. My last question, Shri, is not as much connected with the budget, but clearly we're seeing global headwinds coming in more mature markets. Whether it is Europe or the US. And India, the Honorable Finance Minister also mentioned yesterday, it does seem to be an island of doing good. You think is that we will remain decoupled?
Decoupled is a very strong word on manufacturing, etc. Right now, we are getting more coupled, really speaking. If we are saying that how China plus one strategy mein or manufacturing karenge, to you are actually going to get more integrated with the world. On capital flows, I think that's a slightly different story. A lot of money currently is more focused in being put to use in the US and other mature markets because the returns are very attractive. Today, you can earn comfortably 13 to 15% dollar returns investing in the US. So if you are a very large global investor, that's where you will go. You will not take emerging market risk and others. So to that extent, global capital availability will be, decisions will get postponed. On the other hand, we also hear that a lot of people, particularly very large investors, now see India as one of the sweet spots in which, they're almost wishing that India actually does well. Because the rest of the world, Europe is now becoming an emerging market. So it is better that we emerge before they start emerging again.
And it is true is that, with a lot of the private equity funds that Srini deals with, they're finding US become cheaper. And whilst we're thinking that all the money will come into India, they are certainly starting to think is that US assets have become so much more cheaper. It's probably easier for us to be able to invest. And given the depreciation of rupee that continues to happen, the returns from India are difficult in dollar terms to come up to the levels that they're expecting. Rajiv, I'll come to you before I go to Niranjan. Bhai, one, how much would you rank on 5 overall budget and then real estate? Would you agree with Srini?
No, my rating would be higher. I'd probably rate it somewhere between 4, 4.5 on both fronts.
Even on real estate front?
See, real estate industry has had great last 2 years. I don't think so anybody can dispute that. And if you're having a great period and that party is not disturbed, I would call it very good. In the past we used to worry about that.
That is so true.
When I talk to any developer, I rarely come across anybody who's unhappy with what's happening today, whether in the commercial space, residential space, or even retail space. Everybody is happy today. So if you are happy, then it's best to stay happy. The other is, we should not forget that the government or the FM has a key role in trying to balance out things, both not only in terms of income expenditure, but also in terms of short-term and long-term. And these are difficult things to balance. And I think she's done a fabulous job on not trying to burden our future also. So this whole fiscal deficit being controlled and a path being there to bring it in order, I think is very essential. I just feel that more should have been done probably in bringing this income disparity down in India. I still feel there is huge amount of income disparity and the number of poor are still more than what they should be. So somewhere, I hope in the future, the government does more things to reduce income disparity between the haves and the have-nots. But otherwise, in all respects, It's allowed more income in the hands of middle class. It's allowed more income in the hands of the rich also. Some of these changes, and Shri, somewhere I feel these were arbitrages, as the word which you used. And arbitrages should not be allowed. Niranjan bhai gave me a good example of arbitrage which exists in the upper income side, which was in a way plugged by reducing the surcharge. So we have to find ways to plug these arbitrages. The way it's happened in insurance, while the insurance industry has suffered, but we all know the rich were investing to get better. So was that the intention of the product, or was that the intention, or even in MLDs, was that the intention? No, you found an arbitrage to keep it lower. So the more you reduce arbitrages, the more clarity will come. The one thing which I liked is, up till now, usually when we used to hear the budget, we used to form an impression. And then we used to go home and look at the fine prints and used to realize it's just the opposite. At least this time, we are not feeling in that manner. It was far more simple for us to understand this budget than the previous budgets. That is what I felt.
And two things I completely agree with Rajiv is, one is that invariably we've seen when the party is going on well, there is some disruption that happens. And he's so true is that, that there wasn't an announcement made to disrupt the party. There wasn't anything given, but there wasn't really anything taken. And the second point, what he's saying is absolutely what, more evolved intellectual guys like Rajiv are saying is, guys, these were loopholes. These were loopholes that have been plugged, whether it was even the REIT. It was really, Srini, it was a loophole. I mean, the way that you were distributing dividend, you were showing it in the garb of capital return. But actually, it was dividend should have been taxed. So, Rajiv, what you're saying is whether it's insurance 54, 54F, whether it was the REIT plugging, it was plugging of it, not wanting to spoil the party. The intent of the law wasn't that you have those loopholes they discovered. And fortunately, the government has not done it retrospectively. Yeah. They've only done it prospectively, which is also very good, because in the past we have seen, the tinkering being done retrospectively. Sorry?
There is one loophole that she missed, which I'm sure all of you are currently, which I'm sure all of you are currently beneficiaries of. You see, when you buy equity shares in the market, you pay long-term or short-term capital gains tax. आप सीधा market में खरीदो, PMS के through खरीदो, mutual fund के through खरीदो. It's the same tax that you pay. But if you invest in bonds, आपने directly bond खरीदा, आपने interest में tax दिया. But if you invest in a fixed maturity plan of a mutual fund for 3 years, 3 साल के बाद वो capital gains बन जाता है, और उसमें indexation भी मिलता है. Investing only in bonds. And 87% of investors in those mutual fund schemes are corporates and HNIs. ये loophole बंद होना चाहिए.
So,
is there a mic? Can we have that mic
Anuj, you should note, it's an equity investor talking about debt investing.
So, the suggestion was, सबका बैंड मत बजाओ, up to 2 lakh rupees आप exempt कर दो, जो करना चलने दो. 2 lakh के ऊपर tax करो, like you tax like any other interest income.
Rajiv, you said is that the individuals have had tax relief, and there's going to be more money in the hands of these individuals. Do you think part of it will benefit the residential real estate market?
I feel any money more in the hands of the borrower will benefit. Like today, like people were talking about there's been an increase in interest rates. Will it impact the market? At least I have not seen the market being impacted by interest rates. And that's been true for last 20 years. I've never seen this market being impacted. The only thing which at times, where the market gets impacted is, one is that the cost of acquisition of the house, if that goes up significantly, or you feel real estate prices are not moving, they're coming down. Because a person, even if he invests for his own use, he wants to his net worth to go up. He wants to feel good that I made the right decision. So since the latter is happening now and real estate prices are moving up or have moved up, I think that's the positive side. I think the only thing which probably we still have to find a way is how do we control the prices so that, you know, the house unit cost doesn't keep going up. And somewhere it's a function of commodity prices, but somewhere it also has to become a function of how much more of automation or efficiency each developer brings in his business.
My last question, Rajiv, there's about 10 lakh crores that has been announced that is going to be invested. I mean, that is a huge amount of money. And somebody told me is that in terms of the economic impact, it is 5-6 times of that. So, you know, it's like 50-60 lakh crore that it will benefit the economy. My question to you is, would it help in spurring the real estate further?
I feel this is going to be a big boost for anything. If you notice, if a new airport comes up, a new road comes up, you know, and they're now talking about waterways. We are already seeing the impact of the Dahisar Andheri, you know, train being started on the traffic on the roads. You know, a lot of these things will spur more investments. I have no doubt. In fact, I used to always talk about earlier when enough was not being spent in infrastructure and developers were doing a great job in building houses. I always used to tell them, you know, somebody, maybe you should take the leap of faith and invest in infrastructure, because without that, the future is going to be even more doomed. So I'm very bullish about this.
Very nice. This is very encouraging, Rajiv. You've given thumbs up to all the three things, you know, real estate, overall budget, making sure that the individuals who have more money in their hand is going to, you know, hopefully consider investing into real estate, and then infrastructure definitely benefits and spurs the growth of real estate. Niranjan bhai, coming to you, lot of asks from NAREDCO remain unanswered.
Dil mange more.
What were some of the low-hanging asks that the government could have provided for the real estate sector?
Standard deduction on interest on home loans. I think because interest rates have gone up, irrespective of the fact you do it, the margin people, definitely the decision making is delayed because of the EMI going up. And there we really need to restructure EMIs, even if you don't restructure the interest rates. So I think that's a gap. You know, you did that increase from 1 lakh or 1.5 lakhs to 2 lakhs about 10 years ago. So that really hasn't moved up. And I think that was a absolute need for the purposes of it. And if you're talking about affordable housing, there. You know, we are talking about that 1 crore houses and PMAY scheme being done. But the richest city in India, which is Mumbai, has 50% people living in jhopatpattis. So when you talk about successes in real estate and all the fantastic thing which Hiranandanis and Tatas and all the other people are doing, we have a long way to go for the city. So if you really think about it, when we are asking for real estate, and that's how the PMAY scheme actually got started, I don't think we have achieved too much. You know, can I go and sleep and reach back to heaven and God and say that this industry has delivered for India? The answer is no. So when we are asking for the thing, it's not a question of individual profitability of A company or a B company and all that. You have created surpluses for food, and you've got surpluses in your godowns, this thing. You have surpluses for clothing. Where are the surpluses for housing? Number two, we all talked about, and the Prime Minister talked about, rental housing to come up. This was announced by, at our instance again, rental housing to be done.
I thought that
you return on rental housing and ask our friend, will he invest into rental housing? The answer is no, but you ask him to invest into commercial housing, he'll jump at it. Why? Because you know that the returns in terms of rental housing on residential is not working. So when we are asking for something in that sector, and you're saying that, oh, you're asking too much, it's not asking too much. The country has not developed rental housing. 50% of the population of America lives in rental housing from birth to death. And 50% of our population live in jhopatpattis. Now, there's a difference. So why can't you create rental housing as a concept which becomes viable over a period of time? And that is the reason why we say that the rating in terms of housing is not as high as the total budget. Because in the totality of the budget, fantastic achievement. I mean, look at it, the growth of direct taxes, indirect taxes, investment, 10 lakh crores of it, airports, roads, whatnot taking place. Forget the country. Talk about Mumbai region. We have 330 kilometers of metro in the next 3 years. We have got the coastal road being done, which will be extended to Dahisar and so on and so forth. We'll have the Cross Harbour Bridge, which will land equal to half of Mumbai in the next few years, right from Panvel to Karjat. You have the Navi Mumbai airport. You have the Ro-Ro connectivity. You have all the aspects of it. So forget 10 lakh crores. 3 lakh crores are invested in the Mumbai region alone. And I'm not talking about bullet train, and I'm not talking about Mumbai-Nasik. But we still haven't done our Jhopatpattis done. So when we are talking about housing as a subject, my reading to the finance minister and to the prime minister is that you have not done enough. So yes, you have done a fantastic budget. I accept it. And I've accepted it on TV only 12 times yesterday. But what I'm trying to say is it's not about that. It's about if you're fantastic in one aspect of your work, you're not fantastic on the other. Number two, there's another thing. 79,000 crores is not for urban affordable housing. It is urban and rural put together. I don't think urban housing is more than 25,000 crores. I mean, we'll check the number, but I can assure you, because we had already spent 80,000, the balance amount required was 20,000 crores. The rest must be going to the rural areas and other housing also. So I don't think that total number is considered to be urban areas and all. But if you look at the rest of the budget and the way the investments have been thought of, both in terms of infrastructure, the social requirements, the food sector, the health sector, education sector, and all these sectors, I think, I promise you, if I was the finance minister, I wouldn't have been able to do an equally good job. So, I mean, hats off to the finance minister on that. But if you're saying that she did fantastic in housing, except for the fact that she didn't do any damaging, I mean, if that is considered to be good, yes, she did not do any damaging. So are you happy about somebody not doing damaging rather than what somebody has not done in terms of prospectively? So I don't know. Being in the industry only for 45 years, I still expect more, not for myself, not for the industry, but for the country. So I would like, at the end of my life, to say, everybody in this country in the next 5 years or 10 years have got a house. It may be a small house, but it'll be an ownership house or a rental house, which he or she will be able to live from birth to death. And that includes my peon and my clerk and my people on the street, everyone to do. Give them a rental house. During the British times, they had the charitable trusts, which were allowed to build buildings. And there were chawls which were given to individuals on rent, 5 rupees and 10 rupees rent. And that's how we did it. So something like that needs to be come back. And the disappointment is that after working hard in policy measures, in MCHI, in CRIDI, in NAREDCO and all that, we still haven't achieved that. So all the work that I've put in for 45 years becomes a naught if we are not going to be able to achieve it. Anyway, all of you will have to take over and then do what I could not achieve.
Navin, if I can come to you, a couple of questions. One is, the focus on tier 2, tier 3 cities was quite huge this time. I mean, there was an outlay that municipal bonds for tier 2, tier 3 cities that was said is for urban development, urban infrastructure improvement. Do you think the time has come in for tier 2, tier 3 cities?
So I think the focus, Anuj, is there, but I think it will take a lot of time. The government is definitely thinking about tier 2, tier 3, but there's a lot that needs to be done in main cities as well. So as Niranjan bhai just mentioned about, Panvel, Karjat belt, and all the other infrastructure which is coming, there's a lot. I think they've taken a lot away from the main cities and given a little bit to the tier 2 and tier cities. I mean, the 10 crore is going to have a huge impact. Till March, we'll all enjoy, but after that, it will have an impact. These infrastructure projects, infrastructure allocation, of that, how much is available to the urban cities is also going to be a question. We've been seeing ourselves, I mean, we have a huge investment in Panvel. After 7-8 years, we see the MTHL actually becoming, so the direction is right. The pace at which that will happen is going to be a question. And even the buyers today, though they have disposable income, they don't believe this infrastructure will come up in the next 5 years for them to take those calls today.
Yes, yes, yes.
Whether these calls will be taken, I don't think so. But directionally, maybe after 5 years, yes. Infrastructure announcements and actual work on ground, they're two different things. And people are smart enough to wait for it to come and then decide.
And then, Navin, in the past also, there have been a lot of announcements made, but by the time the infrastructure project has got executed, it has been delayed by several years. So I don't blame the customer when they're not really believing what is being said, and they're saying is we will only believe once it is put in place.
Absolutely. So, it will not have an impact in the next 1-2 years. Only when the infrastructure project comes up, people are able to travel, people are able to commute comfortably then, not before that.
My second is a little broader question, Navin, to you is, how do you see 2023, both in terms of demand and in terms of pricing?
So, I think, Anuj, my own assessment, that's got nothing to do with the budget, but my own assessment, I'm saying wherever there is belief, there is good sales. So wherever there is actual execution happening, or even if there's no execution, but the developer's been able to execute, there is great amount of sale. And we are seeing like 60%, 70% sales happening at initial 3 to 4 months of the launch of the project. Is that across the board? No. We are seeing projects which are taking time or taking a lot of time. There are sales have stopped. People are saying, let it get ready, we will buy in then. We don't want to wait and see whether it gets delivered or no. Apart from that, I see affordable housing going a little slow because of the interest rate rise, and even the infrastructure has not come up, so we see that being a problem. Input cost has gone up, so you really can't increase prices because people are anyway not able to afford, and then if you want to increase your prices, it gets more difficult. So I see 2023 we need to focus in actually the affordable housing sector. How do you reduce your cost? I mean, we've not been able to crack it, but that's the only way, because increasing price is not going to be possible. Within Mumbai, I think if you're doing a good product, people will buy price a little bit. You even increase 5-10%, I don't see a problem. Commercial is doing very well. I mean, even IT is doing very well. Just to give you an example, in our own case, we are at 98% occupancy across IT and CBD, which had come down to 66% at COVID levels. So not only has to give you BKC, we were at a 240, 250 average. We are at 280, 285. So the prices have also firmed up, as well as the occupancy is up. So that's doing very well. We don't see any problem. Affordable housing, I have my doubts.
And I like the 3 points that you say is, Navin. One is belief. I think that's a very powerful word, that, if there is belief, then the buyer is there. Beautiful word, belief. We call it, mature developer, grade A developer, delivery focused, branded developer. You're saying is belief. I think that's a very powerful word. Second is affordable housing. We're also seeing, contrary to the thought that affordable housing is selling, we're starting to see that as well. And maybe, Rajiv, that is where the impact of interest rates has had a significant influence. I know in the rest it may not have had, but that segment definitely has had, perhaps because also the inflation is making his savings come down.
Absolutely.
My only point is, if you look back and see pre-COVID what the interest rates were, we're still not there. These rates may be still lower than that. We went so down on interest rates because of surplus money. And that's the reason I'm saying 8.5% is not a bad rate to get in. If you look back last 20 years, you will find that the average will be more than 8.5 only, and not less than that. The only other point, at least what we are seeing is, earlier when we used to lend to developers, our, horizon used to be 4 or 5 cities only, because we used to feel that developers are organized only in these many locations, and those are the cities where we'll lend. While we'll give home loans in maybe hundreds of cities, but these are the places. But today's scenario has changed. Today that 5 has become probably 10 or 15. And we are finding good developers, good quality construction with good amenities coming in a lot many cities than just the 5 cities we used to earlier talk about. So to that extent, the tier 2, tier 3 cities, at least we are seeing the quality of construction, the professionalism, the timeliness of delivery far, far better than what it used to be, or probably we had not gone and seen, and they always existed. But definitely we are seeing more towns, and especially Gujarat, it's just amazing.
But this is very encouraging because, Rajiv, if the country has to progress, then it has to be tier 2, tier 3. And, for the group here also, it is interesting to notice that the tier 2, tier 3 markets are starting to emerge. So some of these cities where you may have earlier thought that, you would want to do development or may have some interest in that, it may be a good time to, consider those cities more seriously now. That gives me a good segue, Sanjay, to you, the way Navin left it on the office sector, saying is that, it's doing phenomenally well. We saw the results of 2022. It's been the second best year on the net leasing, on the gross leasing, about 60 million square feet that was leased, which is about 6 crore square feet of leasing. People are saying is that people are still working from home. Here we're talking about 6 crore square feet of gross leasing that happened within that calendar year. And rightfully so, Navin, that the rents have gone up. Sanjay, my question to you is this party going to stay, given that we are starting to hear job cuts happening in the tech sector in the US?
Anuj, 40% of the office demand in the country is directly by American corporations, and they have put a pause for expansion definitely in the H1. It could potentially be H2. The good news is, for the first time after 5 or 6 years, Indian banks are growing, and many non-banking financial services segments are also growing, including e-commerce, etc., and software development, which used to be the maximum player at one time, is back and growth is there. Also the alternates, the life sciences, etc., etc. So together with that, I think we will still record something similar, if not more,
than
at
2022.
the end of calendar year Jan to December, but the American corporation participation would be substantially less this time.
You built a platform.
Also, one clarification. Out of this 60 million square feet, actually 40 million square feet is actually just relocation and consolidation, Anuj. So they are exiting grade B and C category assets, and they're migrating to A grade asset, and which I think will put a lot of pressure on such kind of assets, and especially on the rentals. Yeah.
Sanjay, you did a big joint venture with a Canadian fund. The excitement from these private equity, largely North American or sovereign funds, continues to invest in office market in India?
For now, exactly the way Srini described it, they are far more excited with US and opportunities there. They are investing for long term in the country, but they're taking a break for now.
And it is so interesting. We would have thought is that, we are an island, we are doing well, all the money has to come to us because we're the only dude in town. And here, because America has become so cheap that, these guys are saying is let's continue to invest in the US rather than go, 10,000 miles into India and take the risk on that is. We heard a lot about digital in the budget. That was said by the finance minister. Do you think that this is going to boost the IT sector in India?
Tech sector has been growing extremely well. And I think AI is now a reality. And I think groups such as Tata, for example, is heavily invested in this space. All across, especially during COVID, it was very strongly felt that we need to invest in technology and AI and the other tools of digitization. I think India will continue to grow. There would be some concern initially because of these hiccups and disruptions to business for some time, but eventually it will play a very important role. Certainly is playing in our industry. I think one opportunity I want to take to counter the optics that Rajiv enjoys, that we have a great party. I wanted to balance the views. I think we've done a terrible job of creating a wrong optics to Rajiv. The disruption to our business, Anuj, in last 5 years, consistently, So every time the government comes out with something new, we have to reset, whether it's RERA, whether it's GST, whether it is at a state level. You see, right now we're discussing budget, which is central government. But the jurisdiction on our land is actually at the state level. The kind of disruptions that we go through and changes that we go through has severely impacted the profitability of the sector, is what I feel. And the cost of doing business has gone up substantially. So on one side, while the government has, thank God, not done anything disruptive in this budget, which I agree with Rajiv, but on the other side, it's not an easy business anymore. So if you slip one stage, you can get wiped out instantly. And that is the reason why some of the projects which are out there waiting to be lapped up, and you can see from the list of all the NCLT cases that how many are getting lapped up, that pace is not there. And the cost of capital in this country, till such time it remains so high, I think our party will never come.
My final question to you, Sanjay, is no budget is complete without gift city. I have not understood what this gift city is about. So every time there is something about the gift city.
Anuj and I, exactly 25 years ago, was sitting in front of Mr. Ravi Parthasarthi at ILFS building. We were called to listen because whatever we wanted to speak and talk about, they didn't want to listen. And they said, 25 years ago, that Gift City in next 5 years will be the financial district beating Mumbai. And Anuj and I were looking at each other, and they were very keen to us to take the mandate to promote it. And we knew that it's not going to happen so easily. And it's been 25 years. It has come out as a great example of what can be done. But things take time, Anuj, and I still don't get it. I mean, yes, there is an arbitration by the Singapore government, which is great, many other initiatives, but it has come at a cost of huge support from the state and the center, which normally is not the case in every other case. And the other thing you spoke about, the infrastructure comes about and will propel growth. Sir spoke about coastal road. It's taken only 25 years, by the way, since the inception. We know Worli Bridge took 10 years. The Trans Harbour has been there for 20 years. The international airport, 30 years. 30 years. And the international airport, by the way, we spent 2 years. And the Pune has not even got the airport yet. So while we speak about 50 years. So I think this is the issue. Yeah.
Can I just add on the gift city? I think on gift city, don't look at it from the perspective of real estate. I think you look at it from the perspective of a jurisdiction. And what the government is trying to do is that if you look at capital flows in India, and India will continue to be a capital-starved country, most of the money that comes into the country is either routed through Singapore or routed through Mauritius. Mauritius mein hai kya? I mean, we've all seen the Heidenberg report. And what the government is wanting to do is to, whatever you guys were doing in Singapore or Mauritius,
do it in the gift city.
You do it from gift city and I will enable you to do it. It gives me a better handle of what is going on. And I can tell you that all my new funds are now domiciled in gift city. So, so instead of pooling the fund as an AIF in India, I am pooling it as an AIF in gift city for several reasons. If my international investors come and participate in a fund in India and the fees that I charge, I pay 18% GST on the fees. Ahmedabad 3 ghante baad, I don't pay 18% GST on the fees. And there are many such other things, particularly for financial services. In yesterday's budget, one of the things that, in the past people would know that there is this animal called P notes, participatory notes, which was essentially, in simple terms, Credit Suisse, which is now very popular thanks to whatever has happened yesterday, would buy shares of a company and they would then sell those shares through what is called a participatory note. Even if they had 100 shares, they could write a contract for 500 shares, buy and sell outside the country. Who was the net loser? The net loser was the stock exchange in India, the government in India on securities transaction tax, और वहाँ पर तुम्हारा parallel stock exchange चल रहा है. तो ये SEBI ने बंद करा दिया था. Now they have permitted it in gift city. You come and do it here, I'll collect my taxes. Don't worry how I'll collect the taxes.
So basically GIFT City is like a deemed foreign territory.
It's a deemed foreign territory, and right now I can tell you that they have run out of space.
Wow.
So developers who are thinking, you should actually be thinking of putting up space there because वहाँ पर जगह नहीं है.
Anilji, I've only got 5 minutes left. I have two very important questions. One, your view on the overall budget in terms of the ranking 1 to 5, and again on the real estate, you're sort of the last word in here. And second, a little bit more macro is that the way the government has been working on taking out the archaic laws, to improve the ease of doing business. I just want to understand on the real estate, why are they not doing that?
Shall I address this last question first? Okay. I think two very important changes are needed in the laws relating to real estate, and both of them are FEMA related, not income tax. One is that when India requires money, the real estate sector is also very capital intensive and needs so much money all the time. It's very difficult to raise loans and if foreigners come in, then they do it through the equity route because debt was not permitted.
Correct.
I think they should just open out ECBs openly to money coming from overseas for real estate. Now, foreigners can invest in debt into the infrastructure sector, into hospitality, but not into real estate directly. So therefore, they had to disguise their investment into India as if it was equity participation with buy options and sell options, etc., so that they got a proper return. But I think that should be made much more direct. And if Indians can access money from overseas, yes, there is a rupee loss, foreign exchange loss, but then one can cover it by hedging costs. So if money can come from overseas at, say, a 5% or 6% rate, and you pay hedging costs of 6, then you're still borrowing at 12, which is much lower than the banks, etc. So I think that could bring in a lot more funds. The government doesn't have to do much. It would just have to make an amendment to the rules saying that ECB is permitted in real estate. And then unlimited money can come in, and very easily. That's one thing I feel. The second is that other countries are inviting people to come and invest in their country. We see that Dubai will, for instance, give visas to people to buy apartments there. Malaysia has advertised, every country advertises in Indian newspapers about property there. And what do? We say if you're a foreigner, you cannot buy over here. So Donald Trump can invest in a company in India which can own 100 apartments, but he cannot own one single apartment himself. And that is the difficulty. There are so many foreigners who want to come in, and they are not allowed to buy. They buy in Goa because they don't know the rules and regulations. When they are caught, they have to pay huge penalties. But just imagine if you were to say that India is now doing well, there are more facilities than ever before. Any foreigner can come in, buy an apartment here. Not only will the money for that apartment come in, but all for furnishing, for his living expenses, for stay in India. There will be so much more money that comes in from the funding route and from the customer end. So I think both of these
are very good points.
Very easily done by the government.
And finally, what would you rate the budget at?
As a budget speech, not as a budget. As a budget speech, I would say 4, because we don't know how the budget will play out. In terms of the tax provisions, I would say about 2.5.
Oh my God.
Because the language of the provisions, the way they are done, with the retrospectivity, the lack of vision in that, and the fact also that some things have not been properly utilized. For instance, increasing employment has not been touched. It could have been. We've had that in the past before. A long time ago, we used to have an export market development allowance under Section 35B of the Income Tax Act, whereby you got a weighted deduction. Now, suppose, for instance, they want to increase employment. They could say, if you pay an employee 100 rupees, then we'll give you a deduction of 150 rupees. So that way, it becomes much cheaper for you to employ rather than just mechanizing. So I think there were things that could have been done, which have not been done. So that's in terms of the tax provision, not only in real estate.
We had very lenient teachers to Mr. Harish's left. We had very lenient teachers. We had a very strict teacher here, doing the checking today. But thank you very much for sharing your opinion. It's been pretty encouraging overall. in terms of where the market is, where the sector is, where the industry is. And I like, Rajiv, your opening statement that they haven't troubled you, they haven't disturbed you, you guys enjoy. They could have been much worse. But Niranjan, you also said the right thing is that they could have done perhaps a lot more. I certainly agree with you is that rental housing has to come in. It can't be that housing for all, which is Prime Minister's dream. He's not said housing for all to buy. He just said housing for all, which also means rental housing does need to come in.
Nowhere in the world does the whole population buy a house.
Exactly.
And there's no need
for them to do that. And great from the FDI side. Hopefully, Srini, we continue to see more and more money come into India. Commercial, my guess is Sanjay will continue to do well. 2022 was a surprise, pleasant surprise of a year, and hopefully this year 2023 will be as similar to 2022. And finally, Navin, residential seems to be doing well. I love the word belief. That those guys who have a belief in the product, in the partner, in the player who's producing that they will continue to buy, and the party is on for those guys. So thank you very much, guys. Big round of applause to the audience.